And here are the crypto top headlines. Base surges past Solana as total value locked nears $400 million. Plus, Polkadot seeks support to add 1,000 Parachains to its ecosystem. Next, Ether turns inflationary as network revenue plunges to 9-month low. Also, the Federal Reserve has released a working paper on asset tokenization and risk-weighted assets. Welcome to Crypto Top Headlines, bringing crypto's news to you. Our first top headline is Base surges past Solana as total value locked nears $400 million. As per DeFi Llama data, Solana's total value locked has decreased by 9.64% over the past month to sit at $358.96 million, while Base's total value locked has surged to $397.32 million. The total value locked on Coinbase's Layer 2 network Base has surged to $397.32 million since launching in August. That figure now places Base ahead of Solana network, which has a total value lock of $358.96 million at the time of writing. The past 30 days have been significant for Base, with data from DeFi Llama showing that the network's total value locked increased by a whopping 97.21% over the past month. In comparison, Solana's total value locked has decreased by 9.64% over the same time frame. Two Base native projects account for the largest share of total value locked on the network. Decentralized exchange Aerodrome Finance takes the top spot with a total value locked of $97.83 million, while decentralized social media app Friend.tech ranks second with a total value lock of $36.53 million. Aerodrome was launched on August 28th, enabling users to deposit liquidity to earn its native Aero tokens, among several other features. While it failed to pull in significant deposits during its first couple of days, Aerodrome's total value locked skyrocketed on August 31st, with $150 million piling in on that day alone. Its total value locked reached as high as $200 million on September 2nd. However, the initial hype appears to have cooled since then, with the total value locked decreasing by roughly 51% from its peak. Friend.tech launched on August 11th, and the platform enables users to tokenize their social networks via the buying and selling of keys. Despite being pronounced dead in late August due to tanking user activity and fees, the platform surged dramatically in September. As per DeFi Llama, Friend.tech's TVL increased by 540% over the past month, with most of that coming after a pump that started on September 9th alongside a resurgence in daily trading volume. Looking lower down the list, Base's TVL is generally accounted for by multi-network decentralized finance platforms like Compound, Curve, and Uniswap. Base transaction all-time high. Cointelegraph also reported earlier this month that Base hit a new peak in terms of daily transactions, hitting 1.88 million on September 14th, according to data from BaseScan. That figure placed it well ahead of rival chains like Optimism and Arbitrum on the day, which had almost 880,000 combined. That all-time high remains intact for Base, with daily transactions decreasing to roughly 908,000 as of September 22nd. Next top headline, Polkadot seeks support to add 1,000 Parachains to its ecosystem. Polkadot is a Layer 1 multi-chain network that comes with shared interoperability and security. It ensures a safe passage between hundreds of simple Layer 1 blockchains called Parachains. Due to its unique functionality and high efficiency, the platform became quite popular among crypto users. What made this ecosystem truly valuable was its parachains. Parachain is a parallelizable chain, which means it can work on two different blockchains parallelly. Its computations are completely autonomous, and it can work on private as well as public networks. Moreover, every parachain comes with its own function, token, and governance. Since they are so important to the blockchain, Polkadot keeps updating it from time to time. That is exactly what it is trying to do by adding 1,000 parachains. What does it mean for the ecosystem? The core development team of Polkadot made this announcement at the Sub-Zero Developer Conference in Lisbon. They said that the addition of the 1,000 parachains will expand the blockchain. They have named this update asynchronous backing. It has been developed to have the parachain block time. So if a block is currently taking 12 seconds to process, it'll take 6 seconds to post to the update. Notably, it will enhance the block's spaces by 5 to 10 times. In addition, it would facilitate flexible scheduling for future scaling work. Asynchronous backing will do it through instantaneous core time and elastic scaling. The team said that they have a well-planned roadmap to support 1,000 parachains and 1 million plus transactions per second. Parity engineering lead, Sophia Gold, said that it'll make Polkadot a reliable and long-lasting solution. Reportedly, the developers will deploy asynchronous backing on Polkadot's Rococo testnet in 2 weeks. Parity Technologies, a major contributor to Polkadot, shared this information at the Sub-Zero conference. However, it didn't say anything about the timeline of the mainnet release. Parachains stem the security attributes from a central blockchain called Relay Chain. They function as application-specific blockchains that maintain interoperability on Polkadot. Gold also mentioned that asynchronous backing would enable Polkadot to multiply its validators. She also said that it is the most significant event in the Parachain consensus since it launched 2 years ago. How would it impact the crypto industry? As the functionality of Polkadot grows, it'll also become a more valuable blockchain ecosystem. It would emerge as a better option for enterprises looking for parallelizable systems. Furthermore, 1,000 parachains will make the ecosystem faster than ever. They will make the consensus algorithm more transparent while eliminating unreliable nodes. In the future, it would also help the blockchain and expansion programs. The implementation of any other update will be easier. The developers won't have to go through the whole rigmarole every time. With heightened scalability, the network will be able to secure better advantages for the users too. So it seems that the update will do all good to the network and the crypto domain. But technology keeps evolving and no one can forecast the future. So for Polkadot, it is the right time to brag about their technological achievements. Next top headline, Ether turns inflationary as network revenue plunges to 9-month low. The decline in activity in the network is partly because of the adoption of Layer 2 networks, and the trend will continue in the near term, according to Into the Block. Ether has reverted to be inflationary amid plunging activity on Ethereum, which could weigh on the token's price, analysts say. Network fees, a proxy for usage, plunged more than 9% this week to $22.1 million, lowest in 9 months, data by blockchain analyst firm Into the Block shows. Consequently, the supply of ETH, Ethereum's native token, has been increasing as fewer tokens were destroyed or burned to verify transactions than created, ultrasound.money data shows. The decline in network fees is partly driven by the adoption of Layer 2 networks and will likely continue in the near term, Lucas Alturamo, research head at Into the Block, told CoinDesk in a Telegram chat. This trend may be putting some pressure on the second largest crypto asset as its supply has been growing over the past month, reverting its deflationary trend, Into the Block wrote in a report. Ether's deflationary narrative emerged after last year's merge a major upgrade for the network that saw Ethereum transitioning from a proof-of-work consensus mechanism to proof-of-stake, profoundly altering the cryptocurrency's supply dynamics. During busy periods, the network burns more tokens than created, curbing its supply, which is usually considered bullish for the price. However, when network demand is low, the dynamic flips. Into the block joined a roster of crypto observers who noted bearish developments for ETH. JP Morgan analysts said in a report earlier this week that Ethereum's much-anticipated Shanghai upgrade failed to boost network activity, as transaction counts, active addresses, and total value locked on the blockchain have all fallen since April. Crypto services provider Matrix Port reiterated its negative outlook for the crypto asset compared to BTC in a Friday market update, citing shockingly low revenues and lack of buzz around the next protocol update. The firm forecasted earlier this month that ETH could fall to as low as $1,000 if the trend continues. Ethereum has recently changed hands at $15.91 and dropped to a 14-month low price against BTC. Our next top headline: the Federal Reserve has released a working paper on asset tokenization and risk-weighted assets. According to Crypto Potato, the Federal Reserve has released a comprehensive working paper examining asset tokenization and risk-weighted assets, RWA. As the financial landscape evolves, these innovative financial instruments are attracting considerable attention for their potential to transform investment strategies and reshape traditional markets. The article outlines that tokenization, like stablecoins, consists of 5 basic components: a blockchain, a reference asset, a valuation mechanism, storage or custody, and redemption mechanisms. These elements create a connection between crypto markets and reference assets, improving the understanding of their impact on conventional financial systems. As of May of 2023, the estimated market value of tokenized assets on permissionless blockchains is $2.15 billion. This valuation includes tokens issued by decentralized protocols such as Centrifuge and established companies such as the Paxos Trust. Despite the challenge of obtaining comprehensive time series data due to the variability of tokenization designs and levels of transparency, DeFi Llama data reveals a growing trend of tokenization within the DeFi ecosystem. Asset tokenization offers access to previously inaccessible or costly markets, such as real estate, where investors can acquire stakes in specific properties. Its programmable nature and smart contract capabilities enable liquidity-saving mechanisms in settlement processes and increase efficiency. Tokenizations also enable lending using tokens as collateral, providing a new way of financing. Transactions involving tokenized assets settle faster than traditional reference assets, potentially revolutionizing settlement processes in the financial industry. However, there are concerns about financial stability. The potential for growth in tokenized markets raises concerns about the fragility of crypto asset markets and the implications for traditional financial systems. The primary long-term interest focuses on the connection between the digital asset ecosystem and the traditional financial system through tokenization buyback mechanisms. In cases where the reference assets lack liquidity, vulnerability to stress transmission may arise. This risk reflects concerns raised in the ETF market, where the document explains that liquidity, price discovery, and volatility of ETFs are closely related to their underlying assets. As tokenization expands, traditional financial institutions may become increasingly exposed to crypto asset markets through direct ownership or collateralization, introducing new dynamics and linkages. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.